Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets continue to decline as the dollar trades near a two-month high. Investors now focus on a slew of large earnings reports that will be announced over the course of the week. Essar Steel's lenders want ArcelorMittal to shell out more for the stressed company, people in the know have told Bloomberg. Rising raw material costs impacted Asian Paint's second quarter earnings. The paint maker also saw a contraction in margins. Technology major HCL Tech is likely to report a muted second quarter. The company is likely to retain its FY19 revenue and margin guidance though. And robust AUM growth coupled with stable asset quality is likely to drive yet another strong quarter for Bajaj Finance. Let's talk about the US markets. Falling shares of financial and energy companies pulled the Dow Jones Industrial Average lower, resuming a stock market sell-off that had knocked the broad index further from its highest level of the year. Sarah Ponzek of Bloomberg News sums up all the action in the US markets in this report.
U.S. stocks were mixed in Monday's Wall Street trading session, with the Dow and S&P 500 ending the day lower, but the Nasdaq finishing the day higher. So this all ahead of an extremely busy week for earnings season. In fact, 160 companies will be reporting earnings this week. That makes it a third of the S&P 500 and the busiest week for earnings season. So tomorrow, a lot of the big industrials companies will really kick it off. We'll hear it from the likes of 3M, Caterpillar, Lockheed Martin, but later on in the week, we will also hear from some of the big tech names. So think Amazon, think Google parent Alphabet. So we will be hearing from some of these big tech names. And today we saw a lot of tech strength heading up to these earnings reports. It was these names that did indeed lead the market higher today. If you look at the S&P 500 sectors, the three best performing sectors today were in fact information technology, consumer discretionary, with Amazon, as well as communication services. So really seeing some strength there on the tech side. However, we did see some real weakness in financials today. The sector down about 2.5%. If you look at the KBW Regional Banking Index, it is now down about 19% from its peak back in early June. That makes it almost in bear market territory. And if you look at the S&P 500 banking industry, every single member of the index was in the red today, with some of the big names, including Bank of America and JP Morgan, that have already reported, really pulling it lower. Also weaker today was the energy space. We did get earnings from Halliburton. Now, they did post an optimistic outlook for 2019. However, they were more so negative on Q4. So they did post a negative or less optimistic earnings outlook for the fourth quarter, and that is what really dragged on the stock today. So from New York, I'm Sarah Ponzek for Bloomberg.
All right, and one of the key features of that report, in fact, was the dollar strength that we were talking about. If we can pull up the dollar index just to indicate how that dollar strength has panned out. Remember, the dollar is currently trading at near a two-month high, and that's likely to have a bearing on all emerging market currencies at the moment. You can see from that chart that there is a bounce that has taken it higher at the moment. Let's also talk about the Asian markets this morning, and in fact, some of that negativity from the US markets has spilled over into the Asian markets this morning. I can see a sea of red in the Asian markets this morning. In fact, three early rises had started in the red, with the Nikkei trading about 1.5% lower, and that continues to be the case. Remember, yesterday when we opened for the Chinese markets, that positivity early on actually helped to the other markets rather to gain some ground. Today that doesn't seem to be the case, with the Chinese benchmarks opening lower by about 0.4%. You also have the Hang Seng that's opened about 0.8% lower in trade today. We'll have to see how the dust settles with those Chinese markets. In fact, especially considering the kind of measures that the Chinese the government as well as the People's Bank of China have taken to support the private institutions in that country. All right, with that, let's turn to India. And the focus, of course, is going to continue to be on earnings. Agam Vakil is here to tell you everything that you need to know going into trade today, and also to tell you what's happening in the futures and options space. Well, Agam, I mean, we've seen in the past, the Indian markets does not necessarily move in tandem with everything that's happening abroad. What are the cues going in?
Well, mixed cues, Alex, once again, and there has been some consolidation when it comes to the benchmarks. But, well, as per the indications of the Asian markets, we are seeing a negative opening for the SGX Nifty, which is indicating a decline of 50 points. When it comes to markets yesterday, well, we did see another cut of around 0.6% for the Nifty and deeper cuts for the mid-cap and the small-cap indices, coming down to the banking index indices, again seeing declines. However, there has been a little bit of a divergence in trend for the banking versus the Nifty indices. That said, there was more weakness in the metal and media indices too, sectorally. Moving in, when it comes to ADRs at this point in time, there has been advance for well, ICICI Bank and Vedanta along with HDFC Bank, and among other ADRs we have seen some weakness in Tata Motors, Dr. Reddy's and Infosys also declining to a certain extent. Now FII is once again sold another 512 odd crores on a net basis. On the other hand, DII's bought equity worth 303 crores again on a net basis. The 58-point decline was essentially accentuated by Reliance Industries, which declined by 35 points. It's followed by IndusInd Bank. Do remember, it was essentially the likes of IndusInd Bank and Kotak Mahindra Bank which also bear down on the banking indices. And on the other hand, it was ICICI Bank and HDFC Bank supporting the banking indices, which is why the Nifty Bank was largely flattish. Of course, Indiabulls Housing Finance making a sharp recovery yesterday. But coming down to the futures and options space, it is expiry where we're going to start seeing some unwinding coming through in the futures. It's the same for the Nifty banking futures too, unwinding coming through, whereas we're starting to see accumulation in the November series. Well, while we do have max OI in the 11,000 call, the call that we are looking at this point in time is the 10,500, which will provide a stiff resistance, at least as far as this series goes. Of course, on the lower end, it's 10,000 put, which has a max OI. In terms of changes in open interest too, we have seen essentially a lot of activity around 10,200, and the 10,600 calls have seen considerable unwinding. But moving down to the India Volatility Index, it has now moved back above the mark of 20. In fact, 21.4 is what we're looking at. And the Nifty put call ratio, as one might imagine, was largely unchanged at around 1.1. Same for the Nifty banking put call ratio, unchanged at around 0.78. And well, we do have Adani Enterprises, which is new in the ban. On the other hand, we do have DHFL, which moves out of the ban. Among other stocks, we're watching out for HCC, which did see a lot of traction yesterday. The stock declined by around 2%. And well, we also had Bajaj Finance, which was extremely active yesterday. Shorts building in across all series. And in Hindustan Zinc, of course, is the other one, but we also saw a considerable amount of shorts. So a bunch of stocks out there, Alex, to watch out for. But I think once again, the focus will remain on the benchmarks today.
All right, thanks so much for that, Agam. Let's talk about commodities now, and Yash Upadhyay is joining in with all the updates there. Yash, very closely, oil is going to be in focus today, especially considering some of the updates that we've seen from overnight.
Absolutely, Alex. And crude oil closed below the crucial $70 per barrel mark for a fourth straight day after the Saudi energy minister eased concerns that the world's largest oil explorer will not be cutting supplies to counter any punishment over the killing of regime critic Jamal Khashoggi. In the event of any disruption to output by Saudi Arabia or any of the other major producers, they would be safely covered by US producers, as crude oil inventories they rose by approximately 3 million barrels per day for the longest streak of weekly increases since March 2017, according to a Bloomberg survey. As far as the base metal is concerned, all the key base metals rose in trade except for copper on the London Metal Exchange, led by strong gains in zinc, which advanced for a fourth straight day in the last 5 trading sessions after Chinese officials announced moves to support Asia's largest economy, buoying the demand outlook for the metal. Aluminum too rebounded after snapping its 3-day losing streak. On the precious metal side, gold, on the other hand, slipped by about 0.3% on Monday to trade just below its 100-day moving average, edging lower after Moody's stopped short of cutting the credit rating of Italy to junk. Back to you.
All right. Thanks so much for that, Yash. Let's talk a little more about that entire Saudi Arabia issue. and all of that stemming from, of course, the killing or the death of Jamal Khashoggi. Saudi Arabia has rejected suggestions that it may restrict global oil supply in response to international pressure over the death of journalist Jamal Khashoggi. Michael Cohen, head of energy commodities research at Barclays, examines the supply and demand balance for 2019 with Bloomberg's Essar Steel. Here's a slice of that conversation.
They stand to gain from their reputation as a reputable supplier of oil to, all the different markets. So I think from here, what we have to focus on is the potential for there to be a break-even price that's arguably higher than the $80 per barrel that Mohammed bin Salman and other senior government officials have been targeting for the last several months. And Bloomberg itself reported back in April that there was, comfortability with a higher price level. So now we have to wonder whether they're going to be comfortable with $90. Are they going to test that higher range? That's the key question we have to be wondering about, because it's clear that with foreign investment pulling out, with higher costs of operations and higher costs of supplying, that's the problem.
Well, and to that point, this is when the U.S. versus Saudi relationship comes into play, because if they have to buy weapons from another country, that could cost more. If they have less foreign investment coming into Saudi Arabia, they're going to need that oil money. And that's a very different circumstance 6 months ago when we're like, I don't know, do they like 80 or do they like 90? Right.
So I think that's the key issue. And I think the other thing we have to be cognizant of is as we move into this time frame where there's a lot of potential for further supply disruptions in Iran and in Venezuela, are we going to see them actually raise output next summer? There is always an increase in the amount of oil that's used domestically. So will they raise output up to 10.5 million barrels a day, or will they just keep it at 10 million barrels a day flat? If they keep it in that lower range, then we're going to end up with stock draws next summer at the very same time that Iranian supply is lower and Venezuelan supply is lower as well.
Which raises the question, is the U.S. going to be forced to grant waivers when they didn't want to when it comes to Iran?
So I think, look, what we've seen over the course of the last 6 months is a kind of evolution in terms of the policy of this administration. It's clear that at the outset it was, we're going to zero, no exceptions. Secretary Mnuchin was over in Europe over the weekend and in the Middle East over the weekend saying, we are going to go to zero again. So I think it remains an open question, but it's clear that they need to at least issue some significant reduction exemptions for India, for China, as they, sort of test this higher range.
You have, for 2019, you have an average Brent forecast of 72. We also heard some things from Schlumberger on Friday talking about some execution issues in the Permian. Do you think you're going to have to revise that up? How much upside risk might we see in 2019? So,
we take a very fundamental view to how we look at the oil markets, and we see, as we look into next year, the supply and demand balance flipping back into surplus. Given that outlook, we cannot be of a more bullish view than we are right now. And we expect that we will see stocks starting to build again. And arguably, we could even see it as soon as the next quarter. So given that outlook, we continue to be of the view that prices need to stay in the range between 70 and 75. If, however, we see a disruption scenario that is more aggressive than what we are currently assuming, and by the way, what we are assuming is quite aggressive already. It's Venezuela below 800,000 barrels a day. Yeah. It's another 300,000 to 400,000 barrels a day lower for Iran. It's, a disruption assumed for Nigeria in the first quarter. So all of this we are trying to take into account, and we have arguably 1.4 million barrels a day of demand growth. And therefore, even despite those assumptions, we're still seeing builds.
All right, let's talk about one of the developing stories over the last few months. In fact, Essar Steel's lenders want ArcelorMittal to shell out more for the stressed company. People in the know have told Bloomberg that the banks, which met on Monday to discuss ArcelorMittal's offer, want the steel giant to increase the offer. Saloni Shukla of Bloomberg News has more in this report.
Well, lenders to Essar Steel are looking to extract more even after it was declared the highest bidder last week on Friday. Remember, ArcelorMittal had upped its bid to 42,000 crore prior to the Supreme Court verdict, which happened on October 4th. Prior to that, it was willing to pay 35,000 crore upfront to lenders and 8,000 crore as a fund infusion into the company, after which it had upped the bid to 42,000 crore as upfront payment to lenders, including fund infusion and payment to the operational creditors, which stands at about 1,000 crores. So currently the lenders are asking for more money. They are voting on this whole ArcelorMittal bid even after declaring it H1 on last Friday and looking to extract more from the company. So we'll have to clearly wait and watch and see whether ArcelorMittal is agreeable even after it gave the highest bid, almost about 8,000 crore more than Vedanta for the 10 million mill plant which is under distressed Essar Steel. So we'll have to wait and watch as to what happens on it. Back to you.
All right. Well, that's the latest when it comes to Essar Steel's insolvency. Let's talk about let's talk about earnings now. Asian Paints reported a 14% drop in net profit for the July-September quarter, led by a rise in cost of raw materials like crude and titanium dioxide, among others. The company's margins saw a contraction. Yash Upadhyay is back to tell you more about the quarter gone by. Yash, take it away.
Good morning, Alex. So it was an extremely weak quarter for Asian Paints. The numbers were on all the fronts a miss as far as the street expectations concerned. The revenues at 4,639 crores came in far lower than the Bloomberg estimate of 4,772 crore rupees. EBITDA was lower by 2%. Margins at 16.9% are the lowest in the last, more than in the last 8 quarters. Net profit fell by 14% to 493 crores. Again, much lower than the Bloomberg estimate of 578 crore rupees. The only key positive to take out was the demand, on which front the management has said that volume growth in the domestic decorative paint business, that has come in the low double-digit number. The street expectation was in the range of 8 to 10%, so it meets that estimate and keeps the demand momentum going, as is the third straight quarter for Asian Paints of double-digit volume growth in the domestic decorative paint business. That apart, the net profit that was hit on account of higher other expenses, which rose by 11%, and a deferred tax expense of 47 crores in the current quarter as against 3 quarters in the base quarter. As far as the segmental revenues are concerned, the home improvement business of the company, which includes the bath fitting and kitchenware business, which is the SS and Sleek, that has seen a 20% growth in revenues, coming in at about 102 crores. However, it continues to remain negative on the EBIT level.
All right. Yash, we'll leave it at that. Thanks so much for that update. Let's stick with earnings, in fact, and it's going to be, or it's likely to be, yet another strong quarter for Bajaj Finance. Robust AUM growth is likely to be aided by consumer finance and the rural book. Shraddha Babla is here to take you through the key expectations. Shraddha, what are we expecting with regard to Bajaj Finance?
Right, so it's likely, we're likely to see that steady earnings growth trajectory continue for Bajaj Finance into Q2 as well. In terms of the key numbers, the net interest income is seen about 36% higher at 2,663 crores. Net profit, on the other hand, is seen about 54% higher at 858 crores. The loan growth, or the AUM growth, is expected to be strong at about 35%. On the back of healthy demand in the consumer segment, where the company continues to increase its market share, and also strong growth on a low base in the rural book. Asset quality trends are expected to remain steady, and provisions are expected also to remain more or less stable sequentially. But given that it is an NBFC in the current environment, it will be more important to watch out commentary from the management in terms of the company's growth guidance. Also, comments on changes in the funding profile will be important. Remember, Bajaj Finance has a positive ALM gap, which is a good thing in the current environment. So no liabilities funding should become difficult for the company. Nevertheless, we will be watching out for any sort of a sentimental impact which could have led to incremental cost of funds rising for the company, and also watch out for asset quality trends, especially in the LAP and two-wheeler, three-wheeler businesses. But overall, at least the second quarter numbers are expected to be good and in line with the past trajectory.
All right. Thanks, Shraddha, for that update. Well, a higher wage bill is expected to keep HCL Tech's second quarter earnings growth in check, even as the rupee weakness is expected to aid the top line. Agam Vakil is here to tell you everything to expect with regard to the company's earnings. Agam, what are the key highlights?
Right, I'm going to start off with your dollar revenues, where we're expecting about 2% growth quarter on quarter. And in terms of rupees, we're expecting a 6.3% uptick when it comes to your revenues at a little less than 14,750 odd crores. EBIT margins remain likely to remain flat at around 19.8 versus 19.7%, and profits likely to see a rise of around 1.2% quarter on quarter. Among the key factors, we're expecting the company to maintain the guidance, even though some analysts do suggest that well, there could be a likely uptick in guidance on the back of the depreciating rupee against the dollar. That said, when it comes to organic growth, we are seeing about 1.4% growth, and this quarter will also see the consolidation of its Actian, or rather, Actian acquisition. But moving in, we have to understand that your wages impact will come through for this quarter, and that will counter and offset the advantage seen by the rupee depreciation. That's the reason why we're seeing very little expansion in the margins. That said, what we're going to keep an eye on, well, traction in the IMS and engineering services, organic growth outlook, and of course M&A preferences going into FY19. But on the whole, we're expecting no fireworks, a relatively stable quarter, more or less in line with its peers.
All right, thanks so much for that, Agam. Shraddha Babla is back now to tell you about the stocks and news. Shraddha, clearly earnings going to be front and center. What are the stocks on your list today?
Right, so I'm going to start off with Oberoi Realty. Very good set of numbers, especially in the current environment. There is fear with respect to developers. So revenue growth of 95%, EBITDA is up 81%, and net profit has doubled to 214 crores. On the other hand, there's a mixed set of numbers coming in from Canfin Homes. While net interest income grew by just about 2%, and net profit growth saw a muted plus 7.5% growth on a year-on-year basis. The disbursements growth has been extremely slow at 7%, but on the other hand, the asset quality has remained more or less steady. The gross NPA number has come at 0.63% for the quarter as compared to 0.66% in the June ended quarter. But a weak set of numbers coming in from Welspun India, where revenues grew by 11%, but EBITDA is up just about 2.2%, and that has led to a downtick in the margins. On the other hand, net profit has risen by about 19%, but that's largely on account of a lower tax rate in the quarter. Mixed set of numbers also coming in from Lakshmi Machine Works, where revenue growth is at about 35%. EBITDA margins have inched up by 70 basis points, but net profit is down about 13%. On the other hand, they've also announced a buyback at the price of 6,000 rupees. That's a discount of about 2.5% to the last closing price. Remember, the stock had run up a bit, on the expected buyback announcement. So keep that in mind. Schaeffler India, again, mixed set of numbers. Revenue and EBITDA growth of 19%, but the net profit has fallen 5%. But that's largely on account of an exceptional expense of 39 crores that was booked due to the merger in this quarter. Omax Auto, again, weak set of numbers. Revenue growth of 7%, but EBITDA has been hit and is down about 30%. At about 10 crores. That's largely on account of the raw input costs. On the other hand, the net loss has come in at 1.5 crores as compared to a small profit in the year-ago quarter. That's also, again, to do with a higher tax outgo. So weak set of numbers over there. Aside of earnings, we also have some order wins. Himachal Futuristic has received 366 crore worth advance purchase order from BSNL. ITD Cementation has bagged multiple orders worth about 1,066 crores. Then you have a very small company, Orient Press, which has received an order from the Maharashtra Pollution Control Board directing the company to stop all manufacturing activity at its Sarapur plant. Now, the company derives nearly 46% of the revenues from this plant, so it's important. And finally, you have Lakshmi Vilas Bank, which will continue to remain in focus, and this is on the back of an ET report which says that it's Blackstone and Bain Capital, which are amongst the 5 which have been now shortlisted to acquire a controlling stake in the bank. In fact, the non-binding offers, the report says, are in the range of 140 to 160 per share as compared to the market price of about 85. So that's a sizable premium. Let's see how that one reacts, Alex.
All right, Shraddha, thanks so much for that. Well, there's clearly lots to talk about over the course of the day. Updates from the international space, how India is going to pan out. You find all the live market action right here on Bloomberg Quint Live. There are several stories that are currently on the website that you should check out. First up, a fight between the top two officers of the Central Bureau of Investigation has gone public, with each accusing the other of corruption. Read all that has to do with that story on the website, bloombergquint.com. And two Paytm employees were among the three persons arrested on Monday for allegedly trying to extort 20 crore rupees from the company's founder, Vijay Shekhar Sharma. They threatened to leak stolen personal data and information, according to the Noida police. Now, India might just be the world's fastest growing economy, but it is fighting an increasingly uphill battle against air pollution. While China has had a long reputation for smoggy skies, Beijing has been much more adept at taking coordinated action to tackle the problem. However, the Indian government is now pushing new initiatives that will hopefully make the air a little cleaner. Take a look.
My family is bearing so much, even mentally, physically, emotionally, but financially also.
Person living in a city with 200 microgram of PM 2.5 is actually smoking 10 cigarettes every day. So he's a smoker. And a child, newborn, who's born in that city, from the very first breath is taking the same air.
And it is a dangerous situation, but nobody is realizing it. It is killing our economy, it is killing our generations, it is killing humans.
And no relief is seen for Delhiites anytime soon as pollution levels are continuing to rise in the capital city. The Supreme Court is expected to take a call today on whether the manufacture and sale of firecrackers will be banned across the country. Petitioners had sought a clean and healthy environment, contending that the right to breathe clean air is essential for growth and development. However, the firecracker manufacturers have told the Apex Court that the use of crackers shouldn't be completely banned and that instead they should be strictly regulated. Meanwhile, a bench of Justice A.K. Sikri and Justice Ashok Bhushan had earlier observed that there was a need to strike a balance between the right to health and the right to carry on a trade or profession. Last year, the top court had temporarily banned the sale of firecrackers ahead of Diwali. Well, ahead of Diwali, let us know what you think. What are your thoughts with regard to firecrackers? Should they be banned or should they continue to be allowed to be sold? This is Bloomberg Quint. Thanks so much for watching.